Thanks, Cory. The inquiries into Apple and Google's location tracking could have big ramifications for data collecting companies in the technology industry. Joining us now to talk more about that is super angel investor Mike Maples. Mike is managing partner in the $75 million micro VC fund Floodgate. He's invested in Twitter, Dig, and Gowalla, among many, many others. And Mike, always great to have you here on Bloomberg West. So what's your take on this location tracking? Obviously, this data is useful, but have Apple and Google taken it a step too far?
Well, it reminds me a little bit of the AntennaGate story. So a little over a year ago, well, not quite a year ago, I guess, Apple introduced iPhone 4, and everybody said it's got a screwed up antenna and it's doomed. And for a few days, there was this big frenzy about how doomed Apple was. And then Apple, I think, handled it pretty well. They came out and eventually offered a pretty measured response. And my guess is that's what will happen this time. I think we just haven't heard from Apple yet. But my hunch is that they have a set of good reasons that customers will understand.
It has been almost a week, though, and we haven't heard anything.
Yeah, so I think we should give them a chance to respond. I think they will. And I think that historically, time has sort of suggested that they're pretty good at thinking this through. But I think also that a lot of people are not considering sort of the meta point here. I think that there's an important transition happening in the internet. And so Web 1.0 went from a web of pages and links to Web 2.0, which was a web of people and user-generated content and participation. And now what's happening is that data itself is becoming very valuable, and valuable companies and businesses and opportunities are being created that are going to help consumers in the long run.
Mike, I'll say that AntennaGate was maybe different because that caused Apple's stock to go down. This hasn't really done much to Apple's stock, but I wonder what it's done for the kinds of companies that you back, companies that might be looking at location-based services as a fundamental foundation of a new business. Do you think companies are going to shy away from this now that the future of location-based information might be at risk?
I don't think companies will shy away. I think that when people see the value of harnessing large pools of data, they'll see how important it could be. You know, people talk about invasion of privacy with location information, but for example, Google with self-driving cars could just be totally transformational. It could transform not just driving, but productivity and society. And so there are all kinds of opportunities that leveraging large amounts of data, be it location-based, be it offered by consumers, be it gathered from a variety of sources, from sensors, it could be incredibly valuable. And I think that this is instructive because what we're seeing is that the world is becoming aware of how important this trend is, and that's always a sign of progress in my view.
But in this age of Web 3.0, or whatever you want to call it, do companies need to be better regulated in terms of protecting users' privacy?
Well, I'm not sure it's a regulation issue. I think that Apple could be criticized for not doing a better job of informing people about how they're going to use their data and their location information.
Do companies need to better police themselves?
I think that that's one issue. I think that the government probably will have to be involved in some way, but I'm really nervous about strategies that the government undertakes to create broad meta frameworks of privacy. I think that the government's role is to help consumers get more power over their own privacy and have more decision making and better information about how their data is being used and being able to opt out. But I don't think the government should try to legislate how privacy should work.
Mike, when you imagine location-based services as it works with phones, what are some of the cool companies you've looked at or seen, or what's really caught your eye or helped?
Well, we're excited by a lot of companies, and we're sort of playing both sides of it. So, for example, one company that we're involved with called Yazdi is based out of 10 years of research at Stanford, and they're able to find extraordinary patterns in data, patterns that can help people cure cancer, patterns that can help people in hedge funds find new stock opportunities, patterns that can help the government track down terrorists. And so there are a lot of ways that this big data can be used to create great social good and great consumer value. And so, you know, that's one example. Another example of a company that we're working with plays the other side of the issue. It's called Reputation.com. And Reputation.com, you know, you could, in fact, if your viewers are interested, they can go to Reputation.com/free and do a search of everything that's said about them on the internet. And if there's certain information out there that they don't like, then they can do something about it. Like, for example, the CEO one time, as a parlor trick, said, give me your email address, and I did, and he showed me, here's your social security number. And I was like, I'm not sure I want that out there. So he had it taken care of and eradicated. So, I mean, there are both ways to play this, I think.
Still with us is super angel investor Mike Maples, managing partner of a $75 million micro VC fund called Floodgate. So first, I want to talk to you about this new service that Facebook launched today, a new deals service. How big of a threat is it going to be to Groupon?
Well, I guess the answer is it depends. And I think that there are two fundamentally interesting value propositions with Groupon. One is group buying, and the other is discounts. And I think nobody really knows what the primary value lever is. And so if the primary value is group buying, then I think it's a pretty significant threat, because I think Facebook has considerable assets with their social graph to attack them. But if the primary value proposition is discounts, then I think Groupon is in pretty good shape. And it's not obvious to me, based on what I've seen so far anyway, that Facebook offers competitive discounts to Groupon yet.
Groupon's obviously facing a raft of competitors, hundreds of other daily deal sites that have popped up. I want to bring up your term, Thunder Lizard, for disruptive startups. Yes. Is Groupon a Thunder Lizard?
Yeah, you know, I think that the burden of proof is on the people who are negative about Groupon, because it wasn't even a company basically 3 years ago. And here it's, you know, they're saying it's going to be the fastest company ever to $1 billion right after people said that Zynga was going to be the fastest company ever to $1 billion. And so, you know, I would aspire to fail as badly as they have.
So
you know,
is it Thunder Lizard or no?
you got to call them a Thunder Lizard. I think anybody that gets that big that fast, you know, I sure wish I'd invested in them.
Okay. Well, last time you said Twitter had yet to become officially a Thunder Lizard.
Yeah. So yeah, but I think you could call Groupon officially a Thunder Lizard.
All right.
And maybe even Twitter too, right? I said I couldn't categorically say, but you know, it's doing pretty well.
Now, when you look at Groupon, Mike, company that comes with enormous costs in terms of the staff that it takes to sell these deals. Is this really a tech company? Where's the tech part of this, and can they be outdone, or is it just going to take an army to do it?
Well, and this is why I think that the crucial question is the social networking piece the valuable piece, or the discount piece? Because if discounting matters, then their sales force is a considerable asset in their battle against Facebook. And so then I think they're in pretty good shape. If the value proposition is primarily around social, then I think that the sales force becomes less of an asset and more of a potential liability. But in the short term, I think that I'm pretty bullish on Groupon. I think they've done a really good job, and lots of people have talked about them lacking staying power, and they just keep going. So I think that in the short term, the burden of proof is on the people who are negative.
Now, we've seen some reports about a slowdown in Groupon's sales, at least December, or I should say January over December. Seasonality did not exhibit itself previously. Does that mean they've reached a certain plateau here? And we're also hearing that Living Social may be exceeding them, often with a lower percentage going to Living Social.
Yeah, well, I think that Groupon's fundamental challenge will be, can they transition from being a single product company to a multi-product company? Groupon has a lot of relationships with local merchants, and if they can become more of a broad solution for those merchants, I think they can be a very big company. And I guess that's the part where maybe I should qualify the Thunder Lizard piece is, you know, can they transition to being a multi-products company? But if they can, I think they have a chance to be very big and very important.
All right, Mike Maples, we always run out of time. We'll get back to where you're placing your bets next time. But thanks so much for joining us on Bloomberg West. We'll be right back.